General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's do this. It's week 3. Still got the risk. First 2 weeks. We didn't put no risk on. I'm sitting here looking at this. Okay, boom, boom, boom. We're coming into, we had to do this. Let's look and see. And here. Well, this is just that week that started Sunday. This is Sunday open that day. Here. Let me use an arrow. September open. You can keep that. Start monthly range. We're at all-time highs. You know, I just thought how we do TGIF for the week, we can do it for the month. Current old month equilibrium. We broke above. We don't have, oh, this could be the turning point of the month. This is the month open price. We got some internal range liquidity here. Is this delivery efficient? Because I want it to be. We opened here, pushed. Let's go here. Price pushed up, pushed down. We came, we pushed up here, respected this. So this is all efficient here. Pushed up here. This is all efficient here. This is EQ of the month. We do have some here in discount, but for the most part, it's kind of boring up here. Everything's balanced. We got some gaps, but the gaps got fair value gaps in them. So since we created new highs, we do got a little inefficiency here. Boom. We could probably use this. Let me put start of the month or something. So I'm doing this, the reassessment. I haven't seen one still. Let's see if this might turn around. Oh, snap. I need weekly thingies on this. And it's too many days at the bottom. It's somewhere. That started it. Where's previous month's high? Let's go here. Oh, it's way down there. Let's go back here. The monthly opens like way down here. Yeah, that's true. Because we open. This is a very inefficient month. That's why this draw just makes so much sense. I wonder if on the futures, what's the futures for silver? COMEX. No, we don't get COMEX. No, I think we do get COMEX. Yeah, we do. We don't get ICE. That's the futures we don't get. No, this too bullish too. It's way too bullish. The most you can probably hope for. We do got a gap here. It's gonna eventually do that, but it can go take out this top first. And any dip we get into like a weekly bar or whatever is getting respected. We respected the up candle. We're buying. Let's sell a little bit. No. This is given higher. So ain't no anchor point over here either. Yeah, we got cool stuff down here. But you see how we just left this and we got this little gap. We come back. This is gonna be the line in the sand. Wow, this was here already? And I was watching this range because we did something here. Okay, so this is the month. Pushed down, pushed up. It's like a little dealing range we're in. And this is the monthly range too, so that kind of fits. Current monthly range and monthly open. It's a down candle. So we go here. Yeah, it's 2 weeks ago. Don't see a potential anchor point here. Let's go start the week. I believe this option is expiring as well. Write that down. I'm always upgrading stuff. I was doing like a little library section upgrade too. So I'm gonna start collecting some data on some of the ICT price action models. Cause don't nobody trade them. Alright. Damn. I have a whole framework of this market watch options expiring. Get the screenshot. It might not be quite rich, and it could be. Let's see. Quarterly expiration is the red. It's September. Okay. So quarterly expiration is at the end of this month. Okay. Candle bias. Boom. Let's do this. Hold up. I ain't trying to do that. I was trying to like put a text up under it, but I just leave it like that. Weekly candle bias. It's usually a bearish week. Week, and we about to have quad witching, but Last year, and I remember most contract rollovers and options expiry. We dipped a little and pumped when we were expecting things to be bad. And this FOMC, September 17th. And we got FOMC, September 17th. So we can be bearish. NASDAQ, COT, NASDAQ. Man, NASDAQ got too many things. Okay, so here, yeah, next 100. Let's also put it here while it's still on the clipboard. Next 100, bam. Okay, let it do that while I do this. We're gonna do this. Chicago commercials are heavy on the short side. Note the commercials are heavy on the short side. And they hold 63% of the short open interest. And then let's see what Larry done cooked. Here, put this. Here's a detail. Boom, boom. Slightly bearish. Non-commercials are net long. It would just make sense for them to be net long. Gotta be bullish. Active traders only. Active traders are net short. A slight net short market overall, commercial heavy. Short often indicates reversal risk or sideways consolidation. If commercials remain heavily short during a price uptrend, this may foreshadow a top in formation. Price may stall a pullback unless large specs aggressively buy more. That's what I'm thinking too. But I'm thinking just because FOMC, we need a little dip. When the commercials are this heavy, short and small traders are net long, especially into seasonal highs, the game may be setting up for a surprise reversal. Watch volume and structure carefully. That's interesting. Volume and structure carefully. Let's do, hold on, let's make this a header. do silver. Platinum. Silver's been running too. Then let me put it in here. Okay, I made this one faster. I don't know if I should make the other one faster though. Let me go look at this. All right, the producers, they're hedging. This just looks super bullish to everybody. Managed money is just like, okay, they got 30% of the loans. Dealers got 45% of the short. Silver looks one-sided bullish. I feel like this is what you want to see. I'm in the swing trade. And I think I'm going to ask to Larry. Because Larry's the man. Is this what it looked like, Larry? Is this what the $1 million play look like? Let me put this in here. What do you think? All right, let's see what he said first. Boom, boom, boom. Net total extremely bearish. Who's bullish? It's important. Managed monies are heavy short. Did you read it right? Hold on. Let's see if you read it right. Let me put it on this screen so I can double check his numbers. All right, so let's see what he got. Producers. Oh, no. Producers, long, short. His managed money is flipped around. Yeah. Okay, hold on, wait. Managed money long is 49,390 and short is 13,535. I'm gonna have to make it think longer now. Look at the image again. Okay. Okay, still bearish. Boom, boom. Yeah, managed money bullish. Yeah. This is divergent. Cot report, commercials bullish, speculators bearish. Okay. Active traders. Yeah. Commercials are protecting themselves. I wonder why. Reversals, if speculators are wrong. I don't think speculators are wrong, though. It tends to bottom in August and rise in October. Commercials shortening the strength. That's what they're doing. Funds heavily long. That's what's going on. September seasonal strength. This could be the last leg up before correction. Okay, note this. Nah, I don't need no chart. You reading the Cot report wrong. Okay. This is the updated. Okay, I got this on the other screen. Good thing I double checked it though. Okay. Now do ask this question. Well, based on what it says, it's saying like, nah, this ain't the swing trade. Let me ask anyway though. Said, do you think this is potential pullback for a swing trade since Trump is spending so much money? Let's see what he say. That's what I'm thinking. Said pullback mean reverse swing trading still backed by cotton macro context. This is not a trend reversal yet, but a high probability short-term swing short driven by potential extremes. Nah, I don't need no trigger zones. I don't like the short though. I like the pullback. I mean, I do like the short to monthly open. I was saying that. I just ain't think he was gonna do that. So let's not close the door. Let's look at EU last. Yeah, I guess it is better. It's not on the PDF because it'll be a real long PDF. Let's go here. That's CME. Show you a short-term rate. And this Kenya coffee is pretty good. Here we go, Euro. Then hit enter. Perfect. All right, let's throw this in here. This is Euro. Okay, boom. And let me look. Non-commercials are short. Wow, super. Wow, commercial. Wow, commercials. This is heavily. Ooh, okay. A lot of volume, a lot of open interest. Even with the 500,000 longs, it's more long traders on the commercial side than it is short traders. They added to the longs, doubled down on the shorts. They took down on the shorts and they added to the longs. Okay. All right. See me working with this Larry. I'm seeing more in the COT report. Shout out to me. Let's see. Let's see here. Okay. What's that? Slightly bearish tilt. Heavy net short hedging. Yeah, they got a hedge. They also bullish. Reversal. It's just saying pullback, which is okay. Okay. Let's roll this up. Boom. I think that's like a typo or something because it ain't supposed to do it. It's supposed to be under. Yeah, put OE week on there. I need to do the Power 3 chart too. I was looking at it and I was thinking I really don't have to do it because I have like a space for 9 charts. I just wanted to delete 6 of them. So that way I only have to do 3 charts on Saturday because it don't make sense to do top down on Saturday. Why is this thing so big? It's 100% chance. Yeah, so we're looking at a rate cut and it's priced in. So rate cuts are priced in. Very sure sales for contract rollover. And it looking like a 0.25%. Yeah, next one is October, December. I need to figure out software watch and ESTR watch, see if it's important or if it can add to what I'm doing. Software ESTR. I'm gonna have to just Google it first because you don't want to ask no bad questions. You want to research and then ask somebody, be like, hey, I researched this. Do you use this? I think you could do this, or I don't think you could do that. All right, next. Earnings. I kind of missed the old Earnings Whisperer calendar. This ain't this week. Yeah, this ain't no top 10 companies either. Earnings season kind of over. FedEx. Let's see what's on Friday. Yeah. So all the big boys, like you got Cracker Barrel reporting this week. And Dave and Buster's. Yeah, you gotta be kidding me. Okay, so nothing interesting on the earnings side. Something this week. Let's go with sentiment. Okay. Cinnamon and Super Bears. We only have 28%. bullish sentiment. So commercials are deploying capital into shorts, because if they was going cash on the side, then neutral positions would have came up. Okay. So weekly. I kind of really don't even need that. Just broke out. Next candle's going to be important. And this candle accumulated orders. So even just from a weekly standpoint, let's get us a fib. Let's get us a fib, a pullback fib. So I want to plan it from then we went here. So for NAS 100, we have, and I'll do it on futures too. What's this? 24,364. That's 0.00. Is this a 4? Okay. I like this for buy side target, and then I like this for sell side target. But I like this to open and push up and then start. I want to start here and go here. Like, it's my ideal delivery. Let's do this. Order flow is bullish. Make sure this closed above or closed through highs. Next level is 24,364. I don't know how this 24. I'm thinking lower. Due to time of year, month, week. Okay. Just for reference. And because I trade futures, I need this. So we got, let me make sure I got it the same, on the same points. That's why I got two windows. I had some good coffee. That Kenya coffee was pretty good. All right, go here, Wednesday. And I got it from, yeah, it looks like the same candle. Big displacement candle. Nah, I had it the next candle because then it's 1, 2 up candles and a down candle. So on futures, this candle is not a down candle, it's an up candle. They finna change it anyway because contract rollover finna come. So all the lines finna move. All right, let's close this. All right, cool. So that is the exact candle, which puts the level right here on futures at 24,313.75. MQ, bam. Okay. Yeah. See, I could take this because how I start the week is how I want to kind of like end it, so to speak. So this is good for Saturday. Power of 3 to end the week and draw liquidity to start the week. Let's go. Here's, I got something going on here. But we got levels over here. And this is when he was talking about that short setup on the cot. That's beautiful if we do. Where are them levels at? Okay. All right, let's not overthink these levels. The very next one is this one. That's all the levels we got. Man, that was easy. Okay. This is 43. We don't have a 3-bar swing high. Let me adjust this. Yeah. We closing everything. Our next level is 43. Even number. And then let's pick a different color. Let's do 43 and do 43. Let's do 42.50. I don't like that either. Yeah. We could wait for FOMC, but I feel like after FOMC we move. 43 it is. 43 it is. Shoot, we should go here. That's liquidity. Liquidity, time a week, options expiry, then sell off. And people reaccumulate here to go higher, to go up here. This candle closed, and this is a gap too. Ticker XHG USD time frame weekly. Okay. Inflows bullish. Some buying retracements. Retracements make sense. Next target is 43.378. I wish it was like dollars and cents, like that extra penny. Like they might come out with that extra penny and it'd be like diabolical in the future. Like instead of $19.99, it'd be $19.99.9, and you have to have that extra 9 cents at the end of the 9. They'd come out with something like that because people be about their money, and I want my 9 cents too. True. Look at this. This is the month. I kind of like how it looks too, but this is the month so far. We was bullish but bearish on the COT on this, and this is most influenced by the dollar. So this is this week to chop. And just looking at this, like I would want to buy into here. Cause look at this candle. This candle just stands out to me. We wick the top of it. We're not closing above it. It's a good swing high too. I respect it. It's a little bit bullish. Maybe 3 drives. Like but that's all I could see is it just taking out these failure swings. This is bullish. It's gonna knock this out this week easily, and I would want to buy up under here just because it's FOMC. It'll get there easily. And stretch. It's just buy side liquidity though. Running this. Time frame weekly. It didn't take that much. Silver's gonna go higher too. When dollar drop, it's gonna be priced in. FOMC week. I'm thinking run lows, aggressive push high, run lows, then aggressive push higher to create new range. Forex might be best play this week, but it's not smart to push before FOMC. Gap risk, wait for 15 minutes after press conference. And that's the part, because you can miss it. Then you got to get used to missing stuff. All right, so we knocked out sentiment, we knocked out earnings, we knocked out charts. We don't really got no anchor point. Store the price. Price has been bullish for the first 2 weeks. We going into FOMC and options expiring and quad witching. I don't think that's real work. I want to engage. It might be a buy to sell and a sell to buy. Skill. I'm gonna look at how charter price action model 2. Okay, this ICT charter price action model 2 talks about using 4 a.m. Tuesday open price to frame trading a weekly expansion. And I might want to throw it back in the mix. I went through some old charts and seen it hitting. Journaling intent, same thing as usual. PO3, AD, case study hunt plan. Undecided yet. Oh no, I wanted to do just finish up building out journal. Case study section for price action models and intraday profiles and weekly profiles. That could kind of end up having catalogs of signatures to kind of map out months. Not yet. One-sided of delivery. Last week was a classic expansion week with Monday creating a low with a small dip. At all-time highs on NASDAQ. Higher time frame, yeah, because we did the month not too long ago. We're just pumping. Pumping right now. We can go a little higher, maybe a little lower, but I don't think this is going to be a down month. Yeah. Monthly chart is super bullish. I don't think we will close a down close month unless something big happens. But still, no, this week can be bigger than expected just based on time of year. It could be. I want to be aggressive this week because it is the one. Hold on. Why? Is it strong higher time frame recession alignment? No. Yeah. So I need to be conservative. Okay. I wanted to go. Oh, wait. Let me just take it. Boom. Here. Oh. I wanted to go aggressive. 2% risk, but it only would work out if I caught the buys. If I catch the sales, I gotta go conservative because it's counter trend. Even though I feel like it can be a home run. Base hits wins championships. But if I catch a buy, I can push 2% risk, 4% take profit with, because I'm always going for a double up. Let me get this weekly profile. Let me get did this, engage, store the price, this. No, I need the Forex factory. I like so I did the little, I like this. This is nice, right? But it's a habit. I haven't broke the habit. I really don't even need it because it's right here. So look, not farm pay. No, that's October. Go up. Building permits. See, everything's right here, but it's something about that Forex factory. ICT don't put me in the loop. Now I'm just watching this. I don't need no yellow. Wednesday midweek reversal. because that's where the news is at. Wednesday. Yeah, it does support my stance. Interest rate, yep, it is clear. Yeah, we're going counter trend now. Playing strike day Wednesday. Let's do this. I'll put this here. We gotta wait for all this. And then this right here should be in the middle of the week. Because that type of stuff goes in the middle of the month. So framework goes in the middle of the week. Where's my pen? So I need to study this off of the CME page. That way I can learn what they're talking about over there. Oh, we template. I don't need that. But I do need to put framework for midweek review. Just when I look at the anchor point on Wednesday. Because I'm going to do a reassessment on it don't make sense. You don't reassess nothing on. Well, you reassess it from the weekly point, but that's right here. And on a daily basis, you don't do that. So that's how it should flow. And I should put this on like a page. Yeah, put it on page. I'm going to have this thing set up so you can see what it's been. How long I've been doing it. This is week 3 on this layout. So 1 quarter with this layout to be set up. Set up like a business. All right, y'all. Y'all have a good day. Peace.